Good afternoon, everybody, and welcome to today's webinar, where we're going to talk to you about what we're seeing in retail, some of the recent trends, what's going on, and then we're going to jump into our annual global retail innovations that we've produced in partnership with 𝗘𝗿𝗀𝗀𝗀 Group. So we're going to take you on a journey around the world, looking at some of the fantastic retail innovations that we've seen as part of this year's study. So I'd like to welcome Brian Walker, CEO of Retail Doctor Group, this morning.
Nice to be here. Thanks, Anastasia. Looking forward to the event.
And then we're going to start with Ben Gilbert, who is the head of Australian Equity Research at Jarden Group. Welcome, Ben.
Thank you very much. Appreciate it. Thanks for having me.
And Ben's going to give us a bit of an overview of what's going on in retail. So I will pass straight to you, Ben.
Fantastic. Thanks, Anastasia, and thanks, Brian, for having me. Look, as always, if people want a copy of this report or to get access to our sort of weekly that we send around with all the spending data and everything, just flick myself or Brian or Anastasia an email and happy to sort of send that through. Look, I think in terms of today, I was sort of putting this together and thought, okay, what are we going to talk about? And I think with uncertainty brings opportunities where I landed, whatever we decide that means. But like obviously at the moment as we sit here, there's an enormous amount of uncertainty out there from both a trading standpoint and also a geopolitical standpoint. And I think what I'm finding in terms of the companies that we're dealing with on a day-to-day basis and people we're speaking with is that you've got to continue to plan for the worst, hope for the best, but always sort of stick to your agenda and hopefully the macro and surrounding factors will be additive to that and not a detractor. But ultimately, I think people have to run their own race and focus on their strategy. In terms of what I'm going to talk to today, and I'll whiz through this, and apologies, some of you might have heard some of these similar industry debates that I've talked to before, but ultimately I think the themes haven't changed materially over the last sort of 3 months or so. I'll touch briefly on the macro backdrop. Then I'll run through a little bit around how we're seeing the consumer today in terms of some of the latest spending data, some of the feedback out there in the trade, some of the key industry debates, a little bit. It's always hard to touch on competition and retail in Australia without talking to Amazon, Shein or Temu, and then finally just a little bit around that outlook and some of the action points. So we'll kick off first just on the macro side. Look, the big thing in terms of what we always like to talk about, and apology, I always like putting a bunch of numbers up, is the big driver, I think, as we look forward here is going to be the RBA. Ultimately, as we sit here today, the Australian consumer is actually in a pretty good position. They've got record levels of savings. House prices, while there can be some wobbles month to month, are generally pretty strong. Disposable income growth is high. We've got tax cuts coming through. And depending on who we see elected, whether they're going to get some pretty big reductions in fuel or we're going to see more tax cuts coming through, all of which is supportive of spending. That said, look, the near term, the big driver is going to be confidence and the cash rate. What you've seen happen in the last week is the market is now pricing in a 100% chance of a cut in May. And you've got many now calling for a chance of a double cut, so 50 basis points. These are some numbers that we've just put out overnight, so sort of hot off the press in terms of our forecasts. What we're now calling for is around 3 more cuts by the end of this year. So that's obviously going to be somewhere around sort of a mid-teens type cut in mortgage payments if you're on interest only, and similarly a little bit less for P&I. And what's really driving this is the fact that we're obviously starting to sort of cut down our GDP expectations. The pace at which people thought we were going to see a recovery is lower. And similarly, just obviously a lot of these global macro wobbles means that we're going to need to see central banks step in a bigger way to really try and stimulate spending and stimulate the consumer. And ultimately, I think what we're finding, and one of the views, if anyone knows what President Trump is doing day to day, I think that's a challenge. But I think what we do know is that he wants to get funding costs down. He wants to renegotiate or refinance the federal debt that's going to allow him to drive stimulus on the other side, be it by tax cuts or cuts or increases in funding. So look, the RBA, I think the view is more positive as we look forward from here. In terms of sort of moving on from here, we look at tariffs. This is obviously front and center in terms of what's on everyone's mind at the moment, rightly so. You'll see late last night this changed in terms of what he's now pushed out for 90 days in terms of when we're going to expect to see the broader based tariffs. And effectively, you've just got a 10% blanket wide on across the globe, except for China, where we're obviously still talking at over 100%. What I think is interesting, just to understand the context, is effectively, and appreciate the tariffs have been delayed, the reciprocals, but they're still in theory on the cards. Is that effectively what it means is we're going to be putting tariffs to the highest level on record, in sort of particularly in the free trade era with the reciprocal tariffs. And this is obviously going to create some pretty material inflationary implications in the US. But more broadly speaking, as we look to Australia and other parts of the world, there's going to be a lot of product that's going to have to find home elsewhere. And so if we then look at some of these macro factors in terms of the probability index around a recession, is that while there's a lot of uncertainty around macro, there's concerns around tariffs, what it means for inflation, for unemployment, for cost of living, is that the market is still seeing a very, very low probability of recession. And the reason for that is that monetary policy, so think RBA, ability to cut rates, has still got a lot of flex. There's a lot of tools at the government's disposal and the RBA's disposal to stimulate. Similarly, you're going to see countries like China, who are obviously right in the thick of this in terms of the brunt of Trump's comments and actions, are going to look to stimulate their economy. And while we've talked about beef and steel and these exports that go to the US, they're actually a very small portion in terms of our national product, in terms of exports. The biggest trading partner and focus for us is China. Now, China is going to have to be much more reliant on itself, and ultimately is going to have to stimulate, which should be supportive of resources, should be supportive of demand for our currency, which all of then allows the RBA to keep cutting and potentially get some much cheaper products coming into Australia from a capacity standpoint. So I don't think that it's necessarily all bad. While it does drive upwards pressure for inflation and currency is a big focus, I think the risk of recession or big macro downturn in Australia is very low. And arguably post-election, we could come out of this in a much stronger position from a macro standpoint. Let's flip to the next one, please.
Ben, if I might quickly ask you, as head of Australian equity research for Jarden, do you see conflicting points of presence here, consumer uncertainty in the retail sector, unsure of what's going on, putting away savings, the influence of the Trump tariffs on pressure on RBA and inflation? There seems to be a bit of a chasm between the two, or is the alignment occurring in your mind, in your research?
Yeah, not really. Like I think the spending backdrop is very much driven by sentiment at the moment. It's not a situation where consumers don't have the propensity or capacity to spend. It's just where they've got the confidence to spend.
Correct.
And
yes.
and uncertainty. If you don't know what's going to happen next month or next week or tomorrow, you change your behaviours. And I'll touch on it in a sec, but if you look at spending, we've seen spending has slowed quite considerably in the last 4 to 6 weeks. And a lot of this comes around uncertainty where you've got Trump, and then we've now got the local election with Dutton and 𝗘𝗿𝗲, who are sort of telling us all how bad it's going to be if the other guy gets in, which again creates concern. And then you chuck in a later timing of Easter nudged up against Anzac Day. It makes it a pretty difficult period to know what's real, what's not, and what the trends are. But I do think ultimately we're actually not in a bad spot.
Yeah, I think that's the key point, as you say, the consumer sentiment, which you're picking up on. So, yeah, very good.
So then, maybe which sort of follows on from that, Brian, as a consumer today, and we'll sort of go to the next one here, please, Anastasia. I think this is the key. And look, I'll give you my view, and everyone's going to have a view. And to be honest, these things change by the day. But if we think about the situation at the moment, we've got the US, it's obviously putting in these tariffs. It's ultimately going to drive prices up in that market. Our bigger trading partners are then going to find other places where they need to sell their product. And they're also going to have to drive the economy in other ways because you're not going to have the US helping them or buying the product to the same extent. So what does that mean? They've got to stimulate. And if you think about China, which there's talk around the bring forward stimulus leaning into the housing market to get that going again, that is all very supportive of demand for products from our country, which then should help our national accounts, provide the government with an ability to then either provide more tax cuts or stimulus. Similarly, if there's more capacity in other markets for some of these inputs, particularly housing-related products, does that start bringing down housing costs at the same time with our rates should be coming down? I think it's all quite stimulatory for the Australian economy as we look in towards the back end of this year. Now, that said, we're still going to have wobbles, and we're seeing wobbles at the moment. We're seeing volatility in the markets. You look at some of the share price moves today, it's a sea of red to a sea of green, and who knows what it's going to be tomorrow. But what we do know is that spending outlook is more favourable because consumers, and you can see in the bottom right chart there, discretionary cash flow is improving. Now, admittedly, part of this is base effect, But as we look into next year, we should start to see mid-single digit, low 20s type increase in disposable and discretionary cash flow. Now, admittedly, this is a function of base effect because we had big dips as people moved from fixed rates of sub 2 to P&I or variable rates of 5 to 6 plus. But we're going to see growth in disposable income. And now if we chuck another rate cut or two on top of that, over and above what we thought, we get more tax cuts coming through. People are going to have more money to spend. Now, we need this because population growth is slowing. But if they've got more money to spend at the time that rates are easing, house prices hopefully go up, we're seeing changes in some of the lending standards. This should all be stimulative from a retail standpoint. And this should flow right through from your boomers who are going on holidays, right through to youth who are shopping in stores, buying clothes to the next music festival. So as I see it, it paints a pretty positive picture. Now, that said, and this is looking at these trends more recently, this is Westpac data up until last week, the top left, things have softened in the last 4 to 6 weeks. And this is a function of leading into the election. You saw 30% plus declines in spending through Queensland in the week of the cyclones. They bounced back the next week, but not to the same extent. And now we've got obviously the back and forth around tariffs, and then we've got an election in early May. Now, importantly, as we move into May, we should get 1 or 2 rate cuts, and I would think that should be the near-term bottom from a spending standpoint, and retailers and brands should be positioning for things to kick as we move into Mother's Day and beyond. And that is the hope and the expectation, because it's all about confidence and moving on. So if we just step back one more, so Anastasia, just the thing that does give me still confidence too is the fact that there's deposits, and this is this bottom right chart. Even though deposits slowed to about a $5 billion increase last month, they're still big numbers. So we do have propensity and capacity to spend. The challenge is sort of moving into the next one is just around the behaviours. And this is a study top left that was from Woolies. They always like to get these leaked documents that obviously find their way to all these supply forums and anyway. But anyway, this is one of these leaked documents from Woolies around their top issues impacting shoppers. Now, this is stuff that we know. It's all about cost of living, house prices. Now, if we start to see the Aussie dollar rising again because we get to more demand, we start seeing cheaper imports coming into the country because there's a lot more capacity out of China and other regions. Hopefully that will help cost of living, furthermore tax cuts, etc. Similarly, easing rates is supportive of housing. These two big drivers of sentiment at the moment, we should be seeing a reprieve as we move through and post the election. And this is what gives us some confidence. And this is hopefully when we start to see other things around your shopping experience become more important, which is then what drives opportunities to grow margin, grow basket, premiumize the shopper. And I think interestingly, I've probably caught up with 20 plus retailers of some sort of various size from Woolies and Wessy's down over the last couple of weeks, is that the market still is relatively rational at the moment. And there's some good data out there you can see through March that gross margins were still up. We're not seeing crazy behaviours from retailers. I think it's rational. What we now need to see is consumers become a bit more confident to spend more. And as I said, I think that's when we start moving beyond and we move beyond the election. So in terms of sort of how the consumer has evolved, and this is similar, I think, to when I might have spoken to a few of you last time, but I've made a couple of small changes. Like the whole promiscuous piece is still as present as ever. People are shopping more stores, researching more. While online penetration is not as strong, it's still used as a tool. You need to understand that messy middle. Value equation is important, but again, you need to think about range, price, value, service, quality, all these different things that fall within the value proposition, where the weighting is, and you would expect price to become a less of a weighting as we move forward. Researching more, again, understand that messy middle as I talked to, need to be excited. This, I think, is really key. And again, the retailers that we find are doing really well in this environment are giving people newness, rolling through product more quickly, giving people a reason to come online again or come to the store and exciting them, either as exclusives or new product. And finally, experience. Again, it falls into that whole value proposition. So then maybe just whizzing through quickly on some of the themes that we're sort of thinking about at the moment, or 6 industry debates. Apologies, I've added another one from last time. Like competitive landscape, trusted innovation, channel investment, monetizing data, retail bifurcation, and costs. So maybe just the evolving landscape. Look, I don't think this is going to be anything new, but I think you've got to be really aware as maybe we sort of kick through to the next is just having a look at what's happening out there. The fact of, and I use the supermarket example here because we get the most data on it, and a charted pitch from Woolies there on the bottom right. Consumers are shopping more stores, and it's not just grocery, it's everywhere. So you need to be understanding where you've got right to play, where you can stretch brand, what your competitors are doing, what consumers are going to tell you about your brand. If you're selling fashion apparel, can you then put a stand in there selling an own-brand range of jewelry or cosmetics or these sorts of things? It's understanding brand stretch. And yes, we're seeing category killers are winning, but why category killers are winning is because they're working out where they can stretch brand to start moving and dominating other categories. And I think for both brands and retailers alike, this is really important. But to do that, you've got to have the trust of the customer. And again, I'm going to hang on the supermarkets here because we've got a lot of data on it. We did a bit of a report recently looking at EDLP versus high-low, and then also looking at the importance of value. What I think again is important is that you need to maintain brand trust along with that innovation standpoint. And if you lose brand trust, you lose the consumer. And I think Woolies and Coles are the best examples here. They were the two of the three most trusted brands in Australia. Now they're the two least trusted brands. And you can have a look at those brand trust and value perception scores. Now, admittedly, it doesn't help when you've got 9 grocery inquiries and PM on TikTok telling people to shop at Aldi. But at the same time, it just goes to show you've got to work out, you've got to think about social license and brand trust and social license. And these things are going to become more important as people stop focusing purely around price. So think about how you can drive trust, which then can open up new adjacencies, can provide you opportunity to premiumize. And trust will come from saying you're sourcing organically, or say you've partnered with someone, or saying you've got store-free pork, all this sort of stuff you're probably already doing, but promote the good things you are to build trust. It then opens up new markets, opens up adjacencies, opens up the ability to do one less promotion. I think it's a really important opportunity to think about how this can be used. Channel investment. We talk a lot about channels. With the word years ago was omni-retailers, then it was, what's it called? It sort of changes by the day.
Ecosystem, omnipresent.
And all this. There's all these fun and wonderful ways to talk about it. I think the reality is that you can shop anywhere at any time now. You can shop in a store, you can shop online, you can shop on your phone, you can do it wherever, you can shop on a plane. You've got to just think about that as just one big blurred experience, and you've got to understand where people are engaging at your brand or your product at different points of the journey, where you can pull them in, be it from a channel standpoint or whatever it is. And then if you want to get them into store, how are you going to do that? How are you then going to add product, but effectively making it seamless? And I think what's really interesting now is while the US is still holding strong on online penetration, us and our poor old friends in the UK are feeling it even worse, is now seeing online penetration, both us and the UK seeing it move below pre-COVID trends. It kicked up, but now it's kicked back down. And interestingly, and this is a report we put out this week, apologies, a bit blurry from how I sized it on here, is just around paid search. Brands are using it less now as well to drive traffic on websites. Now, the only one that's actually kicked up is travel. But it just tells us that people, through their 1P capabilities, are working out better ways to work with shoppers, their customers, or just people shopping, to either drive them to site, drive them to store, or capture. And I think this tells you, one, maybe it's an opportunity you can spend more money trying to target people, or is it just a tell that you don't need to spend as much money around some of these things? Channel investment, CapEx versus OpEx, big debate. Sort of my attempt at putting together a picture, which you can tell I'm not very good at that. But I think there's just this big debate in market around OpEx versus CapEx. And I think it's important about how to find the balance. And I've spoken about this before, but the fortuitous position we're in Australia, if you're a mid to smaller retailer, is that the bigger guys aren't spending any money. Well, they are, but they're not spending as much as they should, or as much as their global counterparts are. So I think this provides opportunities for you to work out where you can differentiate or drive opportunity around experience in the supply chain. And I think that Wesfarmers, some of these names are just probably a little bit behind where they should be in terms of this investment journey, which provides opportunities for mid to small size retailers, be it partnering around logistics, doing whatever it is. But similarly, you need to be spending OpEx as well. Data monetization, another important point. I think increasingly you can buy a lot of stuff off the shelf here, but think about every bit of data you're collecting. This, again, a little diagram I put together looking at health ecosystems. This applies more broadly to all retail. Think about how you can partner, how you can find adjacencies, you can monetize eyeballs. Increasingly, retail now is becoming around monetizing eyeballs through other ways. Walmart, again, obviously global behemoth. The fact they're generating half of their incremental profit growth every quarter from data and digital and media is telling of that. They're now using their core products to continue to invest, to drive more eyeballs, to monetize more on their media, their subscription, their 3P capabilities, all those sorts of things. Again, it's easier if you're a multi-billion-dollar behemoth, but there are still learnings we can get there. Retail bifurcation, same story here. The gaps between winners and losers continue to get bigger, but you are still seeing smaller players with sort of tailored offerings doing well. But three areas, I think, as I touched on there, where we see people moving behind is logistics range and loyalty. Then just around costs, look, I think, apologies, I know this chart's blurry. I just saw it on LinkedIn. It was flying around yesterday. I thought it was interesting. It's just a number of price increases that started coming through. Price is becoming a much bigger tool as we move forward. I think it's going to be accepted in the US that everyone's going to have to put prices up. You saw over 5 million prices in the last 2 days, price increases being put through on Shopify, and that's only going to increase from here. There's only about 30% of people on Amazon, but you're seeing a big increase. So I think, again, think about how you're managing, how you're recovering costs through promo effectiveness, adjacencies, all these sorts of things. But I think there's probably going to be a bit more of a license to take price as we move forward from here. Then just wrapping up on the last couple of topics, just on Amazon and Temu. Look, I think I've presented on this previously, but just thought it's worth reminding that Amazon is now over $9 billion. Is now over $7 billion of GMV in Australia, and we think that's going to move to over 10 in the next few years. There's a great report from PARS if people haven't seen it. Again, you won't be able to read that chart there. I can struggle to read it. But there's some great stuff on category mix and performance. And again, happy to share the report there. But just as a reminder, these guys are going to continue to grow. If you're in fashion, I think you've got to be very aware of what might happen with Shein over the next 6 months. The Chinese government has stopped them from sourcing product and trying to put out a strategy outside of China, at least what's said by Bloomberg a couple of days ago. There is a real risk of a lot more cheaper fashion apparel starting to find its way down into Australia and Europe and other markets. So I think be aware of that and be aware of those. So then finally, just wrapping up, just on the key action points. Look, I think you've got to continue to move with the customer as the value considerations evolve. I think this presents a massive opportunity over the next 6 to 12 months to start pulling back from price, focusing on differentiation, upselling people as they become more confident, positioning your brand, driving loyalty, driving premiumization, and driving brand trust. And this is going to be a theme that's going to come about. I think it's going to provide a real opportunity to lift GP dollars and percentages per transaction. That then flows on around brand trust. Consumers are much more akin and understanding what's happening in the world. You need to partner your brand or work out how you can drive trust, because it drives an opportunity to charge more, to promote less, to keep customers coming back. Expand distribution points. There are so many places you can sell products now. You look at what Meta's doing in terms of their tailored sites that you can effectively create like that, just through going on there, putting some brands. You look at the O2O channel, you look at social commerce, talks Amazon's about to buy TikTok. TikTok's just punched out a whole bunch more markets in Europe they're rolling into. Be across these channels, dip your toe in, understand how to use it. You get different demographics, different customer bases. You can try and test different things that might then work more broadly across your business. Channel innovation that flows on from the first. Think about where you're investing. Understand the return you're getting. Are you better off putting some OPEX in around this? You're better off investing more around an experiential standpoint from a CapEx, finding that balance and working out what your peers and competitors are doing. Utilizing data. This is an opportunity, I think, to monetize more channels and also to monetize eyeballs, which then means that you can be less focused day to day on trying to eke that extra cent or two from GP out of a product. Because if you know you can keep price here, but you can lift your eyeballs by X, maybe that's another area to monetize that then becomes less relevant around trying to drive margin through the core. You can keep that engine ticking, but you can then drive 30, 40, 50% incremental margin from other areas. Then just finally, look, I think we should be more positive post the election. I think the next 6 weeks are going to be tough, or maybe 4 or 5 weeks now, 4 or 5 weeks, but I think we should be able to start seeing some blue sky post then. And I'm starting to get much, much more optimistic around June and the second half of this calendar year. So we sort of get through, manage, and then hopefully it should provide some pretty big opportunities as we move into the back half of this year. Sorry, I've gone a little bit over time, but that is my wrap of where we're at today.
Yeah, great summary, Ben. A couple of really key points for me. I really like the piece around differentiation, keeping it fresh, and we're looking at product innovation, which we're about to talk about shortly. Certainly, retailers expanding out their revenue base, they're monetizing eyeballs, as you nicely say. I do think on the CapEx spend, we've gone through a few years now, business information systems, building the architecture, the spines of these businesses. Now, retailers are going to look for much more return-based value on that. So those that are well positioned will continue to do well, and those that aren't will go through the myriad of all the other sort of consequences of that, I think. So great summary, and yeah, great work.
And I would say, yeah, definitely some of the consumer angles are aligning with a lot of the research that we're doing into consumers. You know, they're looking a lot more for that brand trust, but they are waiting for retailers to almost inspire them and make it an experience to promote that spending. So they're definitely looking for a lot more experiential retailer, but leaning a lot more into brands because of that trust factor. So I think we're definitely seeing that come through. Fantastic. Thank you so much, Ben.
Thank you, Ben.
We're now going to jump into a bit of a tour around the world. So this is our Global Retail Innovation Study. It's now in its 20th year. And every year we work with our partners from 𝗘𝗿𝗀𝘀𝗀 and we take innovative retailers from around the world, and then the best cases win the title of being seen as one of the most global retail innovators. And for anyone that hasn't seen Australian Retail Innovators, that is our local version, and we have just opened nominations this week for you to nominate innovative retailers. So if there's anyone that you think is an Australian retailer that is doing something great, whether it's in the in-store experience, in the digital experience, in their marketing, branding, in the franchise space, nominations are now open for Australian Retail Innovators, and all of the finalists then get put forward to this global piece. And then each year the judges pick several cases, and this year we're lucky to have, I think we've got 2 or 3 Australian finalists in the global piece as well, which we will touch on today. So this is just taking us through this work we do with our global partners, which is 𝗘𝗿𝗀𝘀𝗀𝗀. So we have members around the world, and everyone does contribute towards this with each country. And what is the goal? Well, we want to see what are the main game-changing ideas that we really are seeing propelling retail forward. And it helps us really predict what is coming next, what is coming downstream. And then we can really see, well, how does it actually apply in Australia? How do we make it particularly local to the Australian market? And coupling that with our understanding of consumer behaviour gives us a great barometer for what is going to be happening in the next few years. It helps us understand that omni-channel space, which we've just sort of been talking on with Ben as well, because a lot of the concepts we're going to be looking at today really do go across all of these aspects of retail. It looks into that new technology and how retailers are using these new technologies. So obviously this year there's been quite a bit of AI influence in the finalists. How to think about business models in a new way. So there's a lot of new models coming up, a lot of ways that big retailers are doing things differently, and as Ben says, looking to monetize in different ways. How we're blending that online and offline experience, and really increasing the role that the customer plays, and to help create that product.
We've been members of 𝗘𝗿𝗀𝗀𝗀𝗀 now, and it's a member elected base for about 15 years. It's always been work for us in bringing the best of global retail to our domestic customers, and of course bringing domestic retail to the world. So it's a very important study, and looking forward to sharing with you.
And we can see very quickly over the last 20 years, we've had 785 cases, which has been phenomenal, across 35 countries. And the great thing to see there, Australia does rank in the top 10 of those innovative retailers. So it's really nice to see that we are ranking up there, just behind Brazil, Netherlands, Spain. So really nice to see.
I think we're punching above our weight per capita, Anastasia.
That's a good way to put it. And so we're just going to take a little bit of a journey back, and it's nice to now look back at some of the retailers that have won the overall award. So each year there is a retailer that wins the award, and we can see going all the way back to 2005 some of the really big retail concepts that at the time were innovative and really did stand out. Some of them still in place now, some of them have evolved even more. So we can see the Nivea direct to customer in Germany there in 2007, Walmart sustainable store back in 2008. And as we step through, there's been a lot of innovation in the space of experiential retailer. So the House of Barbie in China in 2010, and really creating these great experiences. US, Italy, still a huge concept now, and actually another finalist this year with a new concept that they've brought out. And you can see as we progress through the different styles of retail that really have made a mark over these last 20 years, and some of the things that we really have seen, particularly in how do we engage the digital space, the social media space, and bringing all of that together. So we can see there House of Innovation, so the Nike House of Innovation, that was in 2019. That was a great example of the new USA concept store. And then moving right to new ways of grocery innovations in 2020, because obviously that was the year of COVID, so we saw a lot in that grocery space. Moving into Patagonia in 2022 in the sustainable area, and right up to a New Zealand brand in the 2024 results.
And what's interesting, and as Anastasia touches on, this idea and concept of brands lasting forever, very, very few do. But what's being said here, and I do take the point, they are innovative in that time, in that space. And it's just that spark of an idea, that gem of an idea, creative space, and the way that these physical retail environments particularly are encompassing the latest trends in consumer and the latest trends in data, AI, or whatever it might be relevant to its time. So some great case studies.
And it's great to see how a lot of these concepts at the time were super ahead of their time, that are now almost potentially common practice or have made their way into everyday retail. And it's become a lot more normal to see a lot of those earlier concepts, particularly in the early noughties, that we say this is everyday retail now. So retail innovations is split into different categories. And the first category we're going to jump into is engaging destinations. So this is a lot about the physical store and some great examples of people creating that experiential retail. So it ties really nicely to what Ben was saying about we need to inspire the customers to make these purchases. We need to inspire them to engage. And this was one coming out of Singapore. So if anyone is visiting the NRF conference in June, maybe this is one to take in Bell's Baking Club. So this was a really different retail concept, rather than just buying cakes. You can go and you can learn how to make cakes. You can take a tablet and it will step you through how to bake the cakes. You can actually get professional training qualifications. If you want to be a pastry chef, you can do all this through this retail store. So it's a really great way of taking what is a classic, we're going to buy some cakes, and really making it a fully engrossed consumer journey. So that you can attend an immersive workshop, you can do a self-guided how to bake a cake, you can develop your credentials so you can move into the field. And one of the other things it was addressing here is recruiting more people to work in this category as well. So giving that inspiration almost to bring people into the category where they were needing workers.
One of the themes we'll see throughout this study is the emergence of the retail shop as a brand hub, as one part of the ecosystem. So themes of socialization, creativity, the caricature, in this case, of the US Astro Milk Bar, the caricature of the Martian Milkman, which then gets carried out in social media, print media, retail media, however it plays out. And so to think, if we think back in time, it was always about how replicable are these stores? Can we build a channel of these? And in many cases, that's possible. But in this example, we've got a business that acts as a brand hub. It's highly interactive. It's very much around this character of the Martian Milkman and how we've got unidentified fashion options or UFOs, themed merchandise, creating a sense of, if you like, exclusivity for Gen Z shoppers, lots of fun, lots of buzz. And we've got this relationship between value, brand identity, and celebrity image. So really building on beauty, really building on fun, and building on it as being a central hub in that brand ecosystem.
And this is one coming out of Italy and the Grand Tour Italia. And this is a really interesting concept. It is a destination for shoppers to go and try different food areas. It goes to the different districts and different regional areas within Italy, and you can effectively eat your way around Italy in this singular concept. It brings in experience as well. It's got a small theme park in there. It's got a bookshop. It's got in-center events. And customers can really go and couple the social, the dining aspect with a very much experience, and it is a destination to spend time there. And it's a really great way of sort of bringing together the ability to educate customers, ability to take them on that journey and make it into an experience. So what would classically be a lot of food counters really just become this journey of education for customers.
It's a really nice, interesting theme park, food park, the next evolution of the Italy model, all about that immersive experience that Anastasia talks through. So to our friends in Spain, the blue banana. Now, for those who know our limbic consumer profiling methodologies and listening to Ben and Anastasia talk about trust, one of the areas is this, or one of consumer profile is very much this sort of, let's call them adventurer, loves a challenge and loves this idea of immersive experience. And this is what we have with Blue Banana. It's expanding physical. It was a pure online player into physical retail, but this flagship is all about interactive hubs, challenges, gamification. It's very, very strong on this, taking the shop as being a little playground for those that love to sort of travel, adventure, and it's very, very deliberate in who its core market segment is. It's 200 square meters, so it's not huge, but it has an additional 250 square meters of theme spaces, a skate park, climbing wall, active participation. So it's a hub. It's a hub for adventurers, 450 square meters in total, but over 50% is not selling product. So you've got this relationship that says, yes, we have the product, but here's the experience. Yeah, it's a beautifully done store.
This one is now coming out of the United Kingdom, and I actually visited this last year when I was in London. This was a great concept, and it's the Gymshark store on Oxford Street, and the store is basically a way to try and get people a lot more engaged in and inspired to go to the gym. So everything within the store can move. They can make the whole store into a training space. So they also have classrooms. There's a reformer Pilates. There's a weight section. And so you can actually go and even trial the Gymshark clothing whilst participating in a class. They have genderless locker rooms. There's a protein smoothie bar in there. And it's really taking this concept of you're going to use the activewear, but into this is the whole lifestyle. So we can visit the Gymshark shop. And you can go to one of their classes, you can wear the Gymshark clothes, you can see how it fits. And I think what I found really quite interesting in there was the fact that everything was very flexible, everything could move. When you made a purchase, there were no checkout counters. The sales assistants came to you and they did it all through their mobile phone. So again, it was all very fluid and movable experience, and so they could change that. And one of the things that I thought was quite interesting as well is all of their models for their clothing have all been done using 3D printing based on actual people's bodies. So rather than a template, all of the mannequins in store are effectively 3D printed real people. So it really is a great way of engaging people, bringing them into the Gymshark, I suppose, community, creating that community, but making, again, it very much more experiential in store. This was a great one. I didn't know they had classes, and I was like, oh, I should have brought my gym kit when I was there.
Yeah, having visited as well, I'm just reminded of the Joe and the Juice there. It's a mirror of a fitness center, highly aspirational, which Anastasia picks up on, and that's its strength. And as you know, for those who follow Gymshark, they've got a wonderful social media, very strong online. Again, that ecosystem build. To our friends in South Korea, I hope I do this title justice, House Dosan, which is a flagship store by the Gentle Monster brand. So if you know Gentle Monster, it's a fusion of art, technology, and dining. And I'm thinking of one of their shops also in the Singapore airport, where you're greeted by these wonderful caricatures. You're actually in a gallery. You're in an interactive gallery, and this is no different. In fact, this is even more so. This is their flagship store. It's, again, merging fashion, art, hospitality. We've got this unique, iconic eyewear, which Gentle Monster is known for, beauty products, an in-house cafe again. Again, this concept of integrating art, kinetic art installations, digital elements, technology and creativity meet. And of course, they've got some retail product to sell as well. The ground floor is always a changing, dedicated pop-up space. And they're very, very strong on artistic collaborations. So that provides the changing atmosphere of the shop. So we would talk, about changing windows and what have you. They do it through their in-store collaborations, partnerships, supporting local artists, supporting local designers. Always something to see.
Fantastic. And this next one really intrigued me. It's a store where you can go when you're designing your home, and it would basically takes you through all of the aspects of home design in a single space. So you can go through 3D visualizations, you can touch and feel all the materials, you can get immediate quotes from over 1,000 certified vendors, and it basically takes homeowners through this renovation and solution journey in one space. So you can look at kitchens, custom furniture, design, you can get quotes immediately, and you can go through that whole end-to-end process of designing your home in a single store. And so what obviously has been classically a lot of different tradies, a lot of different places that a homeowner would have to do, bringing everything together. And this is another one that's coming out of Singapore. So really is quite interesting just to see retail space used in a very different way. And we see a lot in our research that consumers are a lot more time conscious. They really do look to how they can best utilize their time. And this is a great example of not only has it got fantastic digital 3D engaging, but it's a way of making customers value their time. It brings everything together and it just makes things simpler for them.
As Anastasia mentioned, we're leading a tour into Singapore for the NRF APAC, which is first week of June. And we will visit these Singaporean stores as part of the retail tour. So please get in touch with myself or Anastasia, retaildoctor.com.au. Come and join us because there's some fascinating retail coming out of Singapore. The Netherlands, my jewelry atelier. Atelier? I hope I pronounced that correctly too. This is interesting in the sense that, again, it's a creative hub for jewelry. It's not only about the selling of jewelry, but of course it's hands-on personalization, does all the repairs and what have you. The workshops that Anastasia's talked about today, immersive, engaging, interactive. It's an educational point. It's a social point. It's a classic product sale price. It's a creative hub. And so it's a destination for individuals and for groups. So it accommodates parties, individuals, but it immerses consumers into the experience so they can make their own personalized jewelry. And it's changing, again, the whole concept of what we're asking or inviting our customer to do. So clever and innovative in that sense. And also, once again, it provides an environment for customers to dwell, spend time, create a destination out of it. And as we talk about it, it socializes customers to the brand and the experience.
Fantastic. And another one out of London, another one that I also did visit, which is on running. This is the brand that a lot of people know from Roger Federer. I believe he's one of the investors in this brand. And this was a great store. I went into this one, and what you can see in the store is the minute you walk in, you've got this robotic arm, and it's demonstrating how durable and how the shoes are made for running. And it really does create a feature. But within the store, again, everything is movable. So they have these big central areas. And the thing that I actually found is they were really trying to get the customers to engage with the staff, to have the discussions about running, about education. The guy in the store was making my little sister actually run across the store so he could see what her gait was and picking out then the right shoes for her. And it also again leans towards this need for customers to have the ability to get things quickly. So I talked on time previously, and the shelving concept here was really quite interesting. All the sizes were immediately hidden behind these silver shelving on the wall, so you could get the size that you wanted for your shoe, immediately try it on. So again, it was a quick concept, but it was also a very innovative concept. A few other aspects of this store, they've got a sustainability subscription, which again is quite interesting for the brand, that consumers can subscribe to get new running shoes sent to them on a frequent basis. Which are linked to sustainability and the fully recycled shoes, and it again takes customers on that journey. This was a great store. If you are in London, I would recommend visiting this one. The knowledge of the staff was really second to none, and it again was trying to make that very personal customer engagement.
Anastasia's commentary too around Gymshark, the On brand, they're building their tribes. Like-minded customers engaging the brand, but they're also saying at a very subtle level, we are really dedicated to running and the love of running. Come and join us. And if it's not for you, it's not for you. So they do a beautiful job of building the tribe. All right, Sam's Club. Well, those would know the Walmart example of that Sam's Club invokes. So Sam's Club of the future. Well, guess what? It's staff. I was going to say customer less. No, not at all. It's staff less. It's all about the apps. It's AI, computer vision. It's a tech-forward store, or certainly ultimately the Walmart version of that. Customers use the scan and go tool on the Walmart smart app phone, a little bit like their friends at Amazon with the Amazon Go concept. So entirely no checkout lanes. It's shopper exits the store through one of those three blue arches you can see. We've got AI recording all the details of the visit. Certainly computer vision verifies the receipt, ensures all items were scanned properly. So it's a tech store. It'll be interesting to see how this plays out, because our friends at Amazon found that, that mixed results in this sort of people-less store. But nevertheless, you've got robotic arm demonstrations, sensory integration through the walls, smart displays, magic walls, magic mirrors. We've got all this going on. And certainly it's an R&D store for Sam's Club to really build into this technology platform.
Mm-hmm. And I think as we see sort of customers get maybe more used to using this technology, I encountered something similar at the Australian Open this year, and they had just walk out bar, and you could walk in, grab the drink that you wanted, and just walk out, no tapping, no payment. It was really quite an interesting concept, made the lines go very quickly, and you could hear a lot of the people talking about this. They'd never tried this before, but now they've tried it, they were very much sold on the concept. So it's probably just a case of getting consumers used to this ability.
You'd think also, Anastasia, maybe there's a bit of a generational play here, that, younger generations are more adept at this. Going to London and seeing the Amazon Fresh concept, it was just a warehouse. It was an empty warehouse. Maybe it was the time of day, but it felt a little emotionless.
Mm-hmm. And this was the final one in this category. Again, this category has been really strong on that in-store experience. And this one is 𝗘𝗏, again, out of Singapore. And this is a flagship store to really reimagine the way that consumers engage with music. And it's laid out like very much a community space, a community hub. There's areas to dwell and sit. There's a cafe, there's community spaces, there's interactive zones. But again, all the time with that focusing on that love for music and the different items that you can buy to go on that musical journey. And it was really interesting because it's positioned right in the center of Singapore in Clarke Quay. So it actually becomes a destination, and it becomes an experience. It becomes something to do, and you can see customers actually putting it on their list of things to do. It's a time out. It's a great way to spend time. And it changes that concept of it's a music store that I'm going to go in when I specifically need something, to I want to go and dwell here because it looks really interesting. It's somewhere great to hang out. And there's constantly evolving events and different things going on to really keep those customers engaged.
And if I could play the devil's advocate slightly, I love it. It's a very big store. It's 500 square meters. You know, it's got to do about 2.5 million Australian. It'll be really interesting to see how it builds its community to do those sort of numbers, but a wonderfully innovative place.
Mm. So moving into our next category, this one is looking at enriched business models. So this is looking how business models are changing. And we're starting this category, and I'm only going to touch on this one really quickly, but we've seen this come about, very quickly since it was released, and the ability to now shop through TikTok. And so consumers can really engage with the influencers, that can engage with the content creators, and they can purchase immediately. So again, it's changing how customers shop. It's changing where customers shop. It's changing that whole path to purchase, because now customers can see potentially an influencer or a content creator using a certain product, wearing a certain product, and click through immediately and purchase that. And again, it's changing the monetization of it, changing the location of shopping. So particularly as we see that younger Gen Z customer, Gen Alpha, as they come through, we'll see a lot more of that immediacy in their shopping. I see it, I want it, I buy it. And I think this is a really interesting concept that we would expect to see a lot more use of.
And isn't it interesting, we're about to move and have a little chat about the Amazon One Medical. Pretty strong rumor going around that, and I think Ben mentioned it, that Amazon are lining up to buy TikTok. So, the machine gets bigger and bigger, doesn't it? Well, in February 2023, Amazon paid 3.9 billion American, to purchase out One Medical. And One Medical is basically a patient-centered healthcare accessibility, telehealth, and so forth. And now what's really been building is this Amazon One Medical, which is virtual and in-person care through data and technology. And it's really disrupting and innovative in classic healthcare. So now we're seeing, Amazon continue to make these acquisitions, the pill pack, the full service pharmacy, Amazon Care, Amazon Pharmacy, and they're building these models, and they're building them for Amazon Prime members only. So Prime members can get, a very low health call in, if you like, or check in for about $9 a month. They can get the 24/7 access to on-demand healthcare. They've got options for in-person visits at one of the 125 One Medical locations. So there's physical locations as well. So you've got this Amazon play, as I say, disruptive, innovative into the pharma and medical industries, and building this ecosystem, once again, a complete healthcare ecosystem. So extraordinary play, and highly successful, and disrupting traditional medical, pharma, and healthcare.
And I think also what we touched on earlier is building that brand trust, because it's another sort of aspect to customers aligning to that Amazon brand and trusting it even more, particularly as it moves into healthcare. I'll touch on this one really quickly. IKEA pre-owned. If you've been into any of the IKEA stores recently, you'll see that you can now purchase pre-owned furniture within the stores. Well, this is taking this one step further, and it's basically IKEA creating their own marketplace for customers to sell products to each other. So effectively, a bit like we've got a Facebook Marketplace, Gumtree, eBay. IKEA now saying, you know what, we want to be part of this. We are going to facilitate the ability for you to resell your IKEA furniture through our marketplace, and therefore connecting customers who live in the same locality through this marketplace, which is very clever, because they've obviously seen that there is a lot of people using similar products, and they're thinking, well, we can bring it within our community. We can keep it really in our IKEA system. So that was quite interesting.
Yeah, so they're a competitor, naturally, as Anastasia says now, to the likes of eBay and so forth, and to all the marketplaces. But of course, for them, it's also an end-to-end solution, and it keeps that customer close to their brand. This was interesting, and I'll be fairly brief. Shopping centre, 450,000 square feet, 45,000 square meters, sort of luxury high-end. But what they do is they have a mobile or portable shopping centre that can come to you. They have basically about 30 or 40 containers, and they bring those containers to you, to your event, to public space, whatever it might be. They call them luxury deserts. And it's very much targeted to high net worth shoppers. So seems to be going well. It's certainly innovative. It's bringing the shopping centre to you. So in that sense, it's innovative.
And I think what was quite clever here is that they've looked at where the customers are. They've looked at the customer demographics and particularly looked for areas where there is customers of a high net value in that local area, but maybe not the designer shops and the premium shops that those customers need. There isn't a lot of them in the locality. So they can bring this into those areas where they know that those customers do exist. So there's really great sort of flexibility there.
Absolutely.
Our first Australian concept, Naked Wines, which I'm sure everyone's been very familiar with. These were one of the finalists in Australian Retail Innovators last year. And it's the new model of bringing the wines and the small boutique winemakers direct to the consumer. So it allows customers to invest and become effectively angels, which allows the small winemakers to really engage with customers and gives them a lot more opportunities to sell their products. And I think what's quite interesting here is it's creating a lot of wine enthusiasts. It's educating the customer and again building a great community of engaging with the winemakers, customers learning more about wine, taking them on that journey and creating a very curated experience. And they've got the Wine Genie platform, which is really helping customers understand, well, what wines do I like? What wine should I drink? What is my preferred wine? And therefore recommending wines to them. So again, taking the classic purchasing of a bottle of wine to a different level and making it more of an experience. But again, all of this in the online space.
Absolutely. Oh, well, of course, with Plenitude in Italy, again, this theme continues. Here we've got a really interesting concept store in utilities. And what we're looking to do here with Plenitude or the Italian group, Eni Group or Eni Group, essentially they were suppliers of gas and electricity, and they've taken this into a physical space and they're able to then on-sell all the equipment, solar panels, utilities and so forth, insurance, air conditioning, boilers and so forth, into this interactive, curated lifestyle store, and a high degree of sustainability. Not entirely different to a lot of the other case studies, but similar in the sense that it changes the relationship of the customer into a far more integrated space and makes customer, we talk about customer centricity, these models build around customer lifestyle and invite the customer and integrate the customer into the experience, much less transactional, far more experiential, and natural add-on sale opportunities.
Okay, so we're just moving into our final few cases here, and we're moving into the category of towards unified retail. And again, we're coming back to Australia. This is 𝗘𝗰𝗁, and again, you'll have probably heard us talk about this one in last year's Australian Retail Innovators. And what 𝗘𝗰𝗁 have done here is just really change the way customers buy cars, because they've seen a pain point and known that it's quite a frustration. It's quite a long process. You've got to go to the showroom, talk to a salesperson. Well, they've taken away all of that. And you can buy the cars online, have them delivered direct to your door, 7 days return policy, so you can try the cars, see what you think, you can send it back. And the goal of this is really just to remove the friction from the car buying process and really make it a much more enjoyable experience, particularly, some consumers not enjoying the whole showroom engagement. And it's to make it quick, make it simple, make it easy, and really take the car industry in a different space.
Well, Lefty's, of course, out of Spain, and the Spanish have been really proficient in this last period at building innovation and disruptive retail concepts. Given the interest of time, essentially this is a blend of technology and entertainment, a lot of what we've talked about so far: efficiency, convenience, enjoyable, high entertainment focus, high use of the products, integrated experience, social media, building into the ecosystem, but it's immersive, and I think that's the key. It's an immersive hub within its category.
And this one was a bit of a fun one, 𝗘𝗂𝘁 on Roblox. And this is coming out of Poland. And this was to really try and engage that Gen Alpha customer. So this is a convenience store in Poland. And basically what they've done is they've gone into the Roblox game and they engage that Gen Alpha customer through allowing them to go into a virtual 𝗘𝗂𝘁 store within Roblox. And they get rewards for purchasing healthier food. So it's again trying to educate that Gen Alpha into different types of food, what's good for them. They get points for picking more healthier food than others. But again, it's a great brand positioning. It's putting the brand in a different place, and it's putting the brand in front of a customer that they maybe don't have yet. So it's really with the goal to engage a new segment of customers that are not engaging with the convenience store at the moment. And then finally, our very last category, we've got just a couple of examples in here, and this is a better world. So we talk in this category a lot more about sustainability and ethics. And we're kicking off in France with Carrefour and the obviously very big hypermarkets. And they've made 100% handy-friendly hypermarkets. So it's got really focus on all types of disability within the store and being able to assist consumers with all types of disability. So consumers can ask for someone to assist them as they walk in the store. There's sections to help people with reduced mobility. They've changed the shopping trolleys. They've got additions for people with visual impairments. They've got apps to help people in that space as well. So they really are looking to how they can get to assist customers of all different abilities. In the aisles where traditionally things might be harder to pick up, there's buttons for assistance. So customers can actually press that button and say, I do need some additional assistance, but just at this part of the journey. So it just gives the power back to the customers. And it was a really nice example of the full, a big supermarket thinking of things a little bit differently.
And finally, from Austria, the modern farmers market, it's all about local producers, full transparency, tasting, trialing, making meals, restaurants, curated experiences, but it focuses on local, and perhaps this is a little bit of an eye-opener for Mr. Trump's tariffs, building local reservoir, local retailer excellence, and fully transparent in the way they go about things.
Now, we have run out of time there today. There is, in the full download, you can visit our website and you can download the full Retail Innovations 20. There is a lot more cases that we haven't touched on today. We've run out of time for our final few, but there is several more in each category. And you can read a lot more about each case. You can find some more information. So go to retaildoctor.com.au and you can download the full document there. We also have recorded today's session, so we will be sharing that if you missed a session or if you want to share it with anyone else. We'll be sending a link out to the recording.
Well, on behalf of Retail Doctor Group, to you, thank you very much for joining us. To Anastasia, thank you, wonderful job. We use a lot of this content when thinking about best practice retail for our customers, and we're delighted to share it with you. So I'm Brian Walker. On behalf of Anastasia, Lloyd Wallace, myself, Renee, our marketing guru who's helped put this together, thank you.
And big thanks to Ben Gilbert from Jarden Group.
Oh,
that was a great,
of course.
a
No worries,
great
thank
summary.
you.
Thanks,
Appreciate
Ben.
it.
Thanks, everyone.
Fantastic job.